Thank you all for being here so late on a Saturday night. But this is one of the most important topics for the Greek economy. If it is not solved, we will not have strong recovery or strong growth. It is definitely one of the top 2 or 3 issues that have to be solved for Greece to come out of the crisis, come out of the program. Why is it so important? It's so important because it's so big. It affects half the loans that we have in Greece. Half the households, or close to half the households, are not paying their banks. When they don't pay their banks, they do not have bank accounts, they are not bankable, they cannot borrow. It holds back household investment and consumption. When half your corporations are in the same boat, they cannot have working capital, they cannot grow. So this is unlike other countries where they may have 10% of their loans being a problem. Here we have a massive amount of the economy being having a problem with their bank debt. The economy, especially an economy that depends on banks, can only work if you fix this problem. Now, what are the problems in fixing it? A, it's big, as I mentioned before. B, we have some other problems. It's very hard to solve a banking debt crisis without GDP growth. There's a bit of a circularity there, I admit, but still, with GDP growth being flat or negative the past 7 years, it's very hard to see how NPLs will be solved. Now that we're seeing some growth, we have some hope. But historically and empirically, we've only seen NPLs starting to solve 12 months to 18 months after a decent recovery. Okay? And 1% growth is debatably whether it's decent and sufficient. We also have an institutional framework that is probably one of the most inflexible, to use a polite word, in Europe. On the household side, we have the personal bankruptcy law. Every country needs a personal bankruptcy law, it's obvious. But this one gives a free lunch to anyone who goes in it. They don't have to pay anything, even if they deserve it or not, for 7, 8 years. That's unfair. We need something that quickly decides someone's capacity to pay, and that capacity to pay then is decided by a judge. But it cannot wait for 7, 8 years because that creates wrong incentives, creates moral hazard incentives, as we call them. On the corporate side, again, the judicial system is slow. There are many ways to delay court decisions. Liquidation process has improved, but now we're saying that it's improved tremendously, but it still takes 12 to 16 months to get liquidation proceeds. That's too slow, in my view. So, echoing what my colleague from Piraeus said, the institutional framework needs to improve tremendously. Finally, what are the banks doing? Okay, the banks have been recapitalized 3 times. They've built up close to 40, 45 billion of provisions, about half the NPE problem. They have capital ratios which are quite high. But you cannot just stuff capital and provisions into banks. You need to get that amount of money into the loans, i.e. you need the debt reduction of the households, you need the debt reduction of the corporates. So the macroeconomy and the institutional framework needs to work much better. Now, what else are the banks doing? The new strategy is bigger carrots and bigger sticks. We're offering far more generous restructurings, both to households and to the corporate side, which includes significant debt reduction in line with our provisionings, which is 30, 40%, 50% in some cases. We're also using the stick, which is if you're non-cooperative, if you think you can pay and you are unwilling to come to the table, we will take you to auction. So hopefully the combination of the carrot and the stick works. For the stick to work a bit better, again, I emphasize we need a better institutional framework. Now, we're also offering more flexible solutions, which correct incentives. For example, on the household side, we have seen that income is less of a driver of capacity to repay, strange as that may seem, but this is Greece, where we have tax evasion, so it may be not that strange. What seems to be the main driver is positive equity. So we've created products where the individual will have positive equity very quickly in his repayment structure, and by the end of the 15, 20 years of the mortgage, will have high positive equity. So there's an incentive. That incentive seems to be far more of a driver than other things that we've tried. On the corporate side, an additional difficulty is the fact that usually corporates have 3 banks. And the banks have different incentives. One has collateral, one has lent to the owner's mortgage, one has lent to the supplier. Different incentives. The borrower needs a solution with all 3 banks, if it's 3 banks. Could be 4 banks, could be 2 banks. Here we set up coordinating committees. There's the MPO Forum with various leads, which has 8 billion of large corporates with 3 to 4 banks, and that we are trying to solve and have common solutions, and they meet quite often on that, and it's quite successful. I think 5 billion of solutions have been found and are currently being implemented. For smaller corporates, SMEs, again, 3 or 4 banks, but it's only 10 million, so it's a big irritation for banks to sit down and go back to credit committees for such small credits. So here we're outsourcing the credit decision process. This is called Project Solar, and hopefully that will solve the coordination problem for SMEs. And finally, for consumer, we're going the sales route, as was mentioned by my colleague, very small amount of debt to many borrowers. It's very difficult to get them to pay, reputational issues, and in case we have taken provisions of close to 80–90%, so it is easier to sell them at low rates, which solves the problem on my friend here, why they're more successful when you buy at 5 cents. It's much easier to solve the problem. We solved it for you with taking the provisions beforehand. But all jokes aside, services do play and investors do play a very important role in this process, because we as banks cannot solve the problem of so many debtors at once. We will solve the large corporates, we will solve the mortgages, the smaller ones, and we will sell or give out to services. That's the bank's strategy. Last point, again, I want to emphasize, if the institutional framework doesn't help us, we can't go much faster. Thank you very much.